Okay, TCA. TCA is also a single source of trading community information of all e-business suite. Okay. It will consolidate historical AR and order management data for credit review. Okay. Like I said, party has three accounts related to each account as a receivable. It's a global party view, then TCA. Party paying relationship, paying within paying relationship. More or less you can read the theory. Okay. Reports. There are many reports for AR. Mainly the customer listing report, customer profile report, customer. These are all seeded inside the Oracle. Okay. System report. It is not. Then you can have a customized report also based on your
Customer
requirement.
relationship reporting is what, sir? It's about
CRM, customer relationship report, the
see
customer relationship information it will give. Okay, once I go into system, I'll explain that. Okay, you note
okay.
down the report name.
Customer
We'll
relationship.
run that report.
Yeah.
Okay.
Okay.
Payment terms. Payment terms is common to AP and AR. If you create 10% payment term, it will be available in AP as well as AR. Okay, because it's only a mathematical calculation. Okay. Some option. Okay. These are all the profile options. It can be changed according to the requirements of the customer. These are all country wise. Party merge is handled by receivables. True or false?
So I couldn't see the questions, sir.
You cannot see.
Yeah, now I can see. Yeah. Party
Okay.
merge is handled by receivables. Party merger.
Sir, are you there?
Yeah, sir.
True or false? Tell me.
It's false, sir.
Okay. Customer account merge is handled by receivable, while party merge handled by TCA, Trading Community Architect. Architect said is correct. It is saying only customers we can merge in receivable. Party it is merging of customer. It will be and in Trading Community Architecture. Okay. So TCA is the first bigger one. Then comes party. Then customer party. Yeah.
So could you please more explain that in detail? So the trading community architecture.
Yeah. Trade. See, initially you create a customer. There is a relationship between two or more customer. It is a party. So at the higher level, you are having a relationship between the party and the complicated relationship. It comes under TCA. Okay. More or less, you can involve technical people
Higher
also.
level in the sense
Yeah.
complicated
Here you
level
can
meaning,
see.
sir?
Yeah.
Yeah.
See, these are all TCA only. You can see here, right? All grouping and everything relates to the customer. It comes under TCA. We'll see in more exercise. Okay.
Okay, okay. I'll note down
TCA
that
is
also, sir.
theoretical only. Mostly technical people will take care.
Okay.
Process using auto invoice. What is auto invoice? Like I said, it can be a third-party data. It can be loaded through SQL data loader through the interface table. The valid lines will go to into the receivable. Okay. See, like I said, there are many external systems to receivable can be linked. Suppose a customer is having a telecom industry, I said, he can have AMDoc software to record within seconds. So that can also interface within the SQL loader to the auto interface table through receivable. So receivable will take from any of the customized software. You don't think whether it should be like an only an Oracle or order management. Any software it can integrate. Only the table lines, mandate line, it should match. Okay. So error lines will be corrected and it can be pushed once again. It is not a permanent error. Okay. Some fields will be missed. It will be like this. That they call Oracle, non-Oracle system, legacy system. They call in many things. Okay. This is all generic and some technical. These are all technical part. interface table, managing automated invoice system. These are all technical and setups. Once you do real setup, you can do. Okay, how they do through the batch source, imported source, everything. These are all setup part in detail. Okay. Transaction flex feed, all technical part one. Give one reading and then leave it. Okay. It is all mostly technical part. When you do real work, you will have an advantage. Okay. Which transaction are imported through the auto invoice process? Can you read, sir, and answer?
Debit memos and on account credits.
No, first you, okay, only that two. Debit
Because
memo, deposit, guarantee. Top three will come. That is my thing. On account is part of receipt. Okay.
Okay, sir.
Receipt on account.
Oh, okay, okay.
Top three is
No, no, no.
invoice.
Auto invoice process. Okay.
Oh, they say all are correct. Okay.
1 and
Deposit
4
and
only.
guarantee
So because
not
deposits and
imported.
guarantees, that
Are not
is type
imported.
of an
Correct.
invoice, sir.
Debit memos and on account credits only there through auto invoice.
Because those are types of invoices in the
Yeah,
term.
correct. That
Deposits
also
and
should come.
guarantees come in,
That also should come, right?
not all.
I don't know in what term they are asking the question. See, when
Not
everything is type
imported.
of in transaction, everything should come, correct?
Yeah. No, but they've mentioned here saying
No,
that
they said
deposits
our
and guarantee are not.
transaction are not imported.
Yeah.
The correct
So
answer is
deposits
Sir,
and
all are in
that is why,
guarantees.
sir,
transaction
I
that are
told you,
imported.
sir,
Ah,
invoice and on account credits will get imported using auto invoice, brother. Deposits will not get, deposits guarantee will not get imported. That's
why?
why I told.
Why?
Deposits guarantee will not get imported in auto invoice. Auto invoice only debit memos, credit memo on account and invoices only get imported. Invoice
Why?
we
Why?
generate
Why?
for the
What is the reason?
deposits guarantee is security deposit. No, that will accounted as advances in receivables. Uh, not
No,
we
the
generate
correct
we
answer is auto invoice transaction. Suppose why you need a legacy system? Legacy system, like I said, you want to account the real sale transaction, correct?
correct.
So, like sir said, deposit and on account guarantee only on the money part. It is not a real sale, right? That's why it is not imported. It is created correctly in the transaction. Okay, right.
Okay. Okay.
So next one, auto invoice hierarchy grouping rule. Okay, this you will see after the setup. In Oracle Receivable, you can create invoice from the following Oracle application. What are all that? Tell me.
Order management.
Order management, you create sales order. Okay. Okay. Lease and finance management, loans. I think except e-business, you can create. Let's see. See, except e-business. E-business tax only for the tax. All others you can create. Okay.
Created.
Okay, okay.
Process invoice. Okay. We'll see the invoice, how it's created. As I told, profile classes to create a customer and it will check the credit. Then you go to create invoice. Then it goes to the, once it created, optional is print invoice. Nowadays it is going through mails only, attached and mail to PDF, and perform collection and post receipt. If you're having iReceivable, it will be integrated. iReceivable, that's what, instead of printing, it will go through mail. Okay. Simple process. So import transaction or create manual. It is called transaction source. Two types, imported or manual. Manual, it is created directly in the AR. Imported from other module from Oracle order management or any other legacy system. And it calculates, then it printed and corrected. Okay.
Okay.
Standard invoice, header information, credit checking, auto accounting. Okay. So you can read invoice components. capital while entering invoice, Invoice date. If it is open period available or entry and posting to GL, future. What I said, future, it is available for entry, you cannot post. Okay. Closed, not available. Nothing you can do. Invoice line types. What are the invoice line types? If you are having inventory module, you can select the item and create the invoice lines. If you are having memo lines, what is memo line? Non-inventory inventory line. Suppose there is a consultants. I'll pay him in hours. I will create a memo line. Okay. Because he is not an item, it is a service. Right? Enter freight invoice line, sales credit, everything you can read, and while doing transaction, you will see how to create invoice batch. These are all you can see. Okay. Okay. I asked what is accounting rule and invoice rule, correct? Creating copy of invoice, there is a action copy. If you do, it will be copied. That's it. A single thing. Transaction copy. It will be copied and you can modify and do. Using recurring. What is a recurring invoice? Recurring is repeated. So you can do annually, semi-annual, quarterly, bi-month, daily, or a single copy. These are the options available for doing a recurring invoice. Okay. Yes.
Yes, sir.
Okay. Invoice with rule. It has come. Okay. Fixed. What is the invoices with accounting rule? Say accounting rule, fixed or variable or daily. You can see the screen.
Yes, sir. Yes, sir. Yes, sir.
Fixed, variable or daily, it comes under accounting rule. What is invoice rule?
Advance or arrears.
Arrears or advance. So when you create the invoice, you can attach this. And this will, through revenue generating, it will generate the invoice. Now you see in detail. Rule season 9, item fixed, variable, daily revenue rate. Okay. What is daily revenue rate? They say calculated daily. To see the difference between fixed. Use this type to recognize revenue where a specific number of period. A revenue can be spread or a percentage can be specified in the period. So what they say, fixed schedule, once again, anyone can read.
Sir, use fixed schedule. Use this rule type to recognize revenue over a specific number of periods. Revenue can be spread evenly or a percentage can be specified for each period. The default is even distribution. And even the variable, sir?
Yeah, please.
Okay, the variable schedule, use this rule type to recognize revenue by a percentage for the first period. The remaining revenue is spread evenly across the number of periods that you specify during transaction entry.
So what do you understand?
So this is only for the first period in the, you need to
Okay.
the revenue,
So fixed is fixed. Suppose for the next 1 year
the
I am
revenue is recognized
fixing.
by a percentage only for number of periods. Is the, yeah, variable, it keeps changing.
Okay. So by a percentage for the first period, variable is like an EMI. First period you gave more cash. Okay. Right. Suppose housing loan, you pay 10 or 20% in cash, right? So first period you will bulk it, and the variable remaining period you spread across. What happens at one time you pay before itself all the principal amount, you can change the schedule. Fixed means you cannot change. That's it.
Yeah.
So how it calculates first GL date. When you give the first GL date, it start calculating. Okay. And bills in advance and bills in arrear. So what happens? You attach this fixed and revenue rule with the bills in advance and bills in arrear. Okay. So what is bills in advance?
People who would have paid, on an advance, like for example, the rent, instead of paying after completing that particular month, you usually pay the rent.
Can you read this
after
accounting entry in the example January? What they say?
Debit receivables 3,000, credit unearned revenue 3,000,
So
debit unearned revenue. Yeah. Hmm. Yes,
debit
sir.
receivable 3,000. Okay.
Yes.
So what happened next account? Credit unearned revenue. Why unearned revenue is coming in this account?
Because it is
And
the amount is not realized until we receive amount.
That is a correct word. It is not
yeah,
realized.
realized.
Not realized today. Okay. What is the next journal entry?
Debit unearned revenue 1,000, which is
Why you are
realized.
debiting 1,000?
Which is realized
Realized when?
on the date. Uh,
On the current date. So this month you realized 1/3. I think it is quarterly, correct? So it is
yeah, 3
reduced
months.
from
It's
the
a
unearned revenue
quarterly.
and is added to the revenue. Okay.
Okay, sir.
Okay. What is the February entry?
Debit unearned revenue 1,000, credit revenue 1,000.
So what happens there?
Yeah, for the second month it's been realized, so the direct entry. I mean,
Okay. So out of 3,000, 2,000 went.
2,000 went.
Okay. Then
Yeah. In the month of March, it's debit unearned revenue 1,000, credit revenue 1,000.
okay. What happens?
So the whole advance amount has been realized in the course of 3 months.
So what happened to the unearned revenue account now?
That gets knocked
None
off.
revenue will get knocked off.
Knocked off, yeah.
Okay. So what is the final entry?
Receivables
It's
to
ripples to revenue.
Okay. That is our normal accounting entry. Okay.
Yes, yes, sir.
So finally we are coming to our normal accounting entry. Okay. Right. This is what bills in advance. Bills in advance for accounting rule
Fixed.
Okay.
Yeah, yeah, yes, sir.
1 minute. Now you can tell the accounting entry anytime, right?
Yes, sir.
Accounting rule is fixed. Okay, good. The accounting entry are the main thing. Okay. Okay. Now the next scenario. What is bills in advance is invoice rule. Okay.
Invoice, yes.
Okay. Come to the bills in arrears. Now, without seeing, tell me the accounting entry bills in arrears. What will be there?
And
Try. No problem.
bills in advance.
Just try it.
Uh,
Got it?
unbilled revenue to
Okay.
unearned revenue.
So why unbilled and all it's coming here?
Because you not receive it's in arrear now, so that's why.
Okay. Okay.
I mean, you haven't realized the amount yet.
Example of bill in arrears. Okay. Can you read the entry one by one?
Yeah, it's debit unbilled
It is same fixed.
1,000,
Okay.
credit revenue 1,000.
So it is like a reversal. You
Debit
are
unbilled receivable 1,000. Mm-hmm.
okay. So what you are doing? So it is an unbilled receivable. Why it is unbilled receivable? Tell me, sir, any idea?
That is, we are getting money without invoice.
Receivable, it is unbilled. Okay. See, receivable not booked. You didn't generate an invoice. What I'm telling is correct?
Unbilled, yes, sir. Yes, it is yes.
Unbilled receivable, but revenue already done because it is arrear, correct? It is hitting revenue account. So January, February, same. What happens in the March?
The whole amount is realized in the month of March, not in January and February.
What is the accounting entry?
Arrears to revenue.
So what they say, unbilled same, revenue same. It is adding receivable to unbilled receivable.
So the unbilled and revenue gets knocked off.
How revenue will be knocked off?
No, sorry, sir. No, it's unbilled receivable and unbilled, and revenue. No,
Revenue will not be knocked off, right?
no, receivable will get knocked off.
Yeah.
So, but
See,
no,
anyway, your final
I'm
entry
getting
should be
confused,
revenue
sir.
to receivable.
To receivable, yes.
Receivable to revenue. Okay. Anyway, your final entry should be receivable to revenue.
Receivable to revenue.
Either it is advance or arrears. That is coming or not. Just check that. Coming, right?
Yes, sir. Yes, sir.
Okay. Sir, you understand?
Yeah. But sir, could you relate which situation this will occur, sir? Billing in arrears.
Yeah, you are receiving arrears of salary. Before 3 years you have to get, now you are getting. Okay. You are getting arrears for the next 3 months for the 3 years before salary. So what they say, okay.
Okay.
So when you are actually receiving is the March month, but you are trying to recognize before 3, so you are splitting into 3 because you are thinking that the service should be split into 3, or else it will be a bulk.
Okay.
That's the invoice rule, no, sir, which is fixed. So you have to segregate that amount.
Yeah, it is bills in arrear.
Quarterly.
Your
quarterly.
arrear. See, first we seen bills in advance, fixed. This is bills in arrear, fixed amount. Okay.
Fixed.
Just it. Don't get confused. Simple. Okay.
Got it.
Arrear income how you do, advance income how you do. That's it. Okay.
Yeah. Yes.
Okay. Right. See, what is the example they given? The customer entry was the last accounting period. That's it. That is arrear only. Deferred accounting rule. Deferred. So you don't know whether it will come or not, but later it is coming. Okay. Then what will you do? This is called deferred. Okay. Deferred, I think you study in the accounting standard in the CAs and the thing, right? They will give a deferred revenue and deferred expense. Suppose there is a litigation going on against your company. Okay. You don't know you will win the case or lose the case. They will put under the balance sheet footnote. This is deferred. Okay. So either way, it should be the shareholder should know that is deferred term. That's what. It is not actual thing. Okay. See, they finished it. They didn't give the other example. So other things you have to make. Okay. Like bills in advance variable. What you do? Okay, later we'll see.
Yeah.
The amount will be changing. That's it. The period.
Changing, yes, sir.
This is a program. Just leave it. Calculating late charges. Correcting invoices. You can correct the invoices before it get accounted. After it get accounted also, you can add an entry that will make an additional accounting entry. Okay. And adjustment account. Adjustment. What is adjustment? all the invoices are accounted and you have to make minor adjustment. Okay, right? What you do?
Minor adjustments like, sir?
Suppose you want to add in the invoice. Suppose the invoice amount is 10,000. You received 9,950. Because of that, 50 rupees is pending, or you received 50 extra. Either way, okay. So you go to the adjustment in the invoice and make other 50 rupees. That the balance will be nil. So the entry will be adjustment debit or credit to that receivable account, so that it will be nil. So minor adjustment you can make. Okay.
Okay.
It will not affect the existing invoice. It will add an entry. Some maybe mainly because of the tax adjustment you can do it. Printing statement is okay. My notes, I given all the accounting entry for this. Have you seen? Bills and advance
Receivables,
arrears. I didn't.
yes, sir, is given with the navigation.
That receivable.
Receivable, yes, sir. It's with the navigation.
Okay, it's 12 o'clock. Wait. Mm,
So in which chapter, sir, this one?
this is the
Bill
printing
present
bill presented
architecture.
architecture. One minute.